Hello everyone, how's it going? In this video, we're going to talk about Molen, trading under the symbol MULN. This is a very exciting title to cover, with high volatilities providing opportunities and many ongoing projects that might fuel the speculations. At the same time, few people want to invest in the company in the long term. So in today's video, we will go through the latest fundamentals, the price actions, and my analysis as well as my recommendation, helping you make the best decision possible. If you appreciate my content, please consider to drop a like, comment, and subscribe to my channel. Also, please check out the links in the description section, as every help is greatly appreciated. Over the past few days, Palantir has been having a difficult run with its share price, going back below $8 once again, reminding us how fragile and any sort of recovery in the tech sector can be, given the rising interest rates, looming recession, the pessimism of tech sector itself with the waves of layoffs going on. What is specific to Palantir may also be the recent competition that has shown up in the NHS contract bidding. Meanwhile, the worries regarding data safeguarding continues to be an ongoing issue for many stakeholders. Companies like Palantir normally thrive in secrecy, whereas its status of being a meme stock certainly contradicts very much with its own nature and its own business model. With that being said, the underlying technology, the solidity of its clients, and the potentials for this industry all suggest that Palantir has yet to demonstrate its full potentials, as long as the market is willing to give it this time to grow. Molen is a publicly traded company operating in the EV sector, and it is listed on the Nasdaq Stock Exchange. The company designs, manufactures, and sells a range of electric vehicles, including car, buses, and trucks. One of the key factors setting Molen apart from the EV sector is the focus on developing long-range electric vehicles. M115 is a long-range electric truck that a company is trying to develop and eventually to manufacture. It has a significantly longer range than most other vehicles currently on the market, making it an attraction option for people who would like to invest eventually in this massive potential success. Another thing is that they are investing in developing heavy-duty electric vehicles, such as buses and trucks, designed to handle heavy loads and perform demanding work. This is a unique offering in the EV market, where most other companies are focused on developing cars and light-duty vehicles. In terms of financial performance, however, the company has been having a hard time generating income and consequently digging itself a large financial hole that they have to fill every time with further dilution. In terms of the long-term price action trends, despite the recent upward momentums such as IGO distributions, the company has been having a mostly bearish trend over the past 5 years, first trading between $5 to $10, peaking at $15, before finally falling back to below $1. What this suggests is that Molen has been hard hit by not only the market downfall, but also its own fundamental weaknesses. This assessment recently begun to change, but I would say that it hasn't reached a convincing turning point, and that to a point, it still explains why Molen is a stock I would recommend to trade instead of investing in. Regardless of the recent distribution contract or the short squeeze potentials, the short interest surrounding Molen remains real, and that the interest surrounding Molen, period, remains the expectation to scalp a quick gain. With that being said, I also want to add that things can always change within this sector. So if today I say that Molen shouldn't be a stock that you invest in, maybe 6 months from now things could be different. The online communities have been initially skeptical towards Molen. Nowadays it's mostly something that follows the trend. So for example, if things are looking good, they will find the positive aspects of Molen and to say that, you know what, this is why it's been going well. Or if things are plummeting, they're going to say, well, you know what, like such and such reason is the reason why they're doing poorly. And you will also have a small group of fans who will always find reasons for optimism, regardless of how desperate sometimes the situation may be. As far as their online footprint is concerned overall, the biggest factor to consider is whether the price action gives people enough motivation to have a position in Molen. The other factors have sometimes served as a pretext to buy its shares, but more often than not, the price action has already sent that price signal to the market to react positively. On top of that, the macroeconomic trends affecting the sector have also been putting pressure on the stock price, including the increase of interest rates, the capital flight from growth stocks to other sectors, the conflicts around the world, the supply chain issues, and the expectation of a demand that will be softer than usual. And this is going to continue over the next couple of years due to a recession. Another factor to look at is how the flagship company in the sector, so in this case Tesla, has been doing. The EV sector being a relatively new industry, a lot of it is still in development, including the investor's mentality. People often determine whether they want to buy EV stocks based on how Tesla has been doing recently. The idea here is to profit from a sector-wide gravy train conducted by Tesla, pulling all the other ones behind it. We have seen on multiple occasions how the share price of a company like NIO, Lucid, Xpeng, or Molen follows similar trends compared to Tesla. Of course, Molen doesn't always follow the trend, but it has played in its favor, but also the other way around. So we have to be mindful of those factors because they will definitely paint the picture of the surrounding environment in a specific direction. With that being said, let's also take a look at Molen's financials, which might give us some hints about the decisions that the company has to take in the upcoming periods. One thing to note about its financials, it's not generating income for the moment, but we know for a fact that they are currently distributing IGOs in Europe. So this will eventually change with the upcoming reports. The other issue is the cash reserve. So I personally believe that Molen is a company that has to rely on continued capital injection by selling its equity to continue its going concern. This is concerning to say the least, but in my opinion, this is going to continue for the foreseeable future. In other words, the retail interest has to be significantly larger than the dilution that will be announced in order for us to make money. So like I said before, the fundamentals don't necessarily help Molen. They are currently a dead weight that will eventually push the price down. But if we rely on qualitative factors, things that are beyond the immediate reality, but if we project the company to a brighter future, then it's possible that a large number of people might pile in and buy the stock up. This is the kind of behavior we're expecting to see if we decide to invest or to trade Molen. Because in terms of trading, Molen actually has a very good shareholder structure. So they have a mostly retail shareholder base. And what this means is that they will be far more volatile than typical stocks. Of course, I know that BlackRock recently increased their holdings, but this is not doing it for me. That alone doesn't mean much, personally. So the lack of significant institutional participation means that I personally don't want to put money in for the long term. The key behavioral difference between institutional and retail shareholders is their investment horizon. Institutional buyers tend to stay for longer term, with years or decades as the measurement, whereas people who are in as retail, they tend to get in and out very quickly. Sometimes after a few days or weeks, they might already be gone. So the short squeeze seems to be the massive catalyst that we are dealing with at the moment, and this is something that can present excellent opportunities for us. So currently, there is a significant position, around 40 million shares, that are being shorted against Molen. The majority of them are traded outside of public exchanges, so therefore by institutionals. The potential of the short squeeze in this case is significant. The short squeeze is a phenomenon that is observed when traders decide collectively to buy up the price of a stock forcing those who are holding the shares to redeem them. The reason why they may have to do this is because they want to avoid further losses. So the redemption would act as a further wave of purchases, pushing the stock even higher. So it's important to note that regardless of how many stars are aligned on paper, the short squeeze itself may never happen, just because there are a number of factors outside of anyone's control that will determine if the short squeeze is something that will occur. My recommendation for Palantir is to start buying now and to keep enough allocation to spread out the purchases over at least the next 12 months, so that the short-term volatilities can be chiseled out. The holding period should be measured in years as well, with an emphasis on the long-term investment and not the short-term trading.